Taher Badshah is now joining us, Chief Investment Officer at Invesco Mutual Fund. Taher, great to have you with us here. Thank you very much for your time. Taher, you've been steadfastly of the view that there are opportunities still in the broader markets, mid caps and small caps, even as others have kind of pulled their hand back. Just wanted to understand one of the things which I think is lesser discussed. We kind of talk about the overall picture, top-down view, mid caps, small caps, valuations, etc. But as someone was pointing out, maybe the reason why the space is doing very well is because they much better represent sectors where there is a lot of activity, manufacturing, industrials, materials, right? As opposed to, say, the Nifty, where the weight of these sectors is much smaller. In the mid and small caps, the weight is much larger. Almost 0.25% of the mid cap and the small cap index is made up of these sectors. I just wanted to start with your thoughts on this, Taher.
I couldn't agree more, and we've been kind of, pushing the case for mid and small caps primarily on that front. Our enthusiasm on mid and small caps continuing to probably perform. I mean, there could be obviously interruptions in between, but by and large, the cycle is basically predicated on the fact that the domestic economy is doing well, and we are intrinsically positive about the domestic investment cycle and the domestic economic cycle. And most of the mid and small cap companies, many of them, I wouldn't say all of them, but many of them actually are more levered to the domestic opportunity, not as much to the international or the global opportunity, which is probably more the case with some of the large caps, if not all of the large caps. So I think that's precisely what we've observed in the past as well. Even in past cycles when mid and small caps have actually done well, it has coincided with periods when the overall domestic economic situation has been better. And so I think that's the bedrock of our enthusiasm out there. So I'm absolutely on the same page with you on this.
Okay. Taher, hi, good morning, and thanks for joining in. And this is a great time to be putting money to work in new sectors, right? Growing sectors, sunrise sectors as we call it. And one of the spaces which is doing very well is renewable energy. We were just talking about how names like Inox Wind are up almost 25% this week. Tata Power is at a new high. JSW Energy is at a fresh 52-week high. And these are companies that are doing a lot in the renewable energy space. You think the time has come for investors to put more money to work here?
Yeah, I think there are quite a number of opportunities, particularly on the ancillary side, even in the solar and the renewable space. And I think not just solar and wind, but or renewables as such, but even as you know, non-renewables and the traditional fossil fuel related power entities are doing much better now than what they were doing earlier. And it's all propelled by the fact that manufacturing in India has started to look up, and we've seen power consumption hit records in terms of growth after a very long period of time. So I think this whole area will probably buzz, and there will be opportunities. There will also be newer companies which will probably seek the capital markets. So we have some exposure to some of the traditional as well as some of the renewables as well in our portfolios. And I think you're right that this is also the space which will keep attracting attention from the newer category.
Hi, Taher. Good morning. What about the PSU basket? The total market capitalization of these companies, put it together. Yes, we have an LIC that's been included in the last 18 months or so. It's 50 lakh crore. Now, valuation-wise, some will argue that still that entire basket is quite attractive. But sometimes, you have government interference, change of policies that makes things tricky. From the PSU basket, do you all still believe there is value in select pockets? If yes, which are they?
So, Nigel, in our scheme of things, in our definition, actually, PSUs, we run a PSU fund, by the way, as you know, for a very long period of time. And up until a couple of years ago, PSU and the fund itself was basically premised on the fact that it was significant value. It was trading at valuations which were below their own, historic valuations. Level on the market, they've always traded at some discounts to the market in general. But from there onwards, I think we've seen performance, and performances essentially come more on the back of now the growth visibility in many of these PSU-related entities, because they dominate some of the so-called commanding heights of the economy, and therefore, they are obviously the natural beneficiaries. So once again, going back to the fact that these are domestic sector plays. And but now for us, what we are saying, at least as far as the whole PSU space, is that we are not necessarily buying them now for that absolute value which was available a couple of years ago, or up until a couple of years ago. It's more a growth play now. So you have to pay them for their growth. You have to pay their valuations for the growth opportunity that you have in front of them. In several of them, whether it is some of the industrial, it is maybe even in some, maybe perhaps in the oil and gas space, I think we can still seek some value as far as PSUs are concerned. But by and large, I think for most others, it is now a growth objective.
Taher, actually, yesterday, Sridhar Sivaram of Enam was making exactly that point. He actually took your fund name. He said it. He said Invesco runs a PSU fund, and we were asking him how best to get exposure to that space, and he said, "Well, that's a great way to do it." Kudos to you guys for having, and it's a smaller fund, so it still gives you opportunity to do
yes,
well.
and we've got a very stellar record, I would say. I mean, I've been surprised at times that when I look at some 7-year, 10-year performances, I find the PSU fund has actually beaten the Nifty. I mean, I wouldn't have probably imagined that.
Yeah.
So come through. So that's something which is.
You said incrementally, there's in PSUs, oil is the sector where there's still perhaps upside, right?
I would think of them as value, not as much of growth. I mean, we would buy them for value proposition, whereas most others have actually, now you have to think of them in terms of whatever you are paying, is it adequate from the point of view of the growth that they're likely to demonstrate?
But when you say, got it. But when you say value, you mean because of the dividend yield, etc., by that metric, or because values can stay value unless it is people start to value that value.
Yeah, absolutely. So there could be.
There's got to be that growth element as well. But you're saying there's not that much growth element here. So go on.
The good part now in PSUs is that there is value with some triggers. So you at least have some catalysts which actually can, as you rightly said, crystallize that value opportunity in the market. And that's exactly what they were at some point in time. Some of the other sectors in the PSU market were, but they've now moved on to being more of growth entities, and what we would like to incrementally buy them for is probably the growth opportunity that they provide.
Okay. In fact, Prashant, you were talking about the Invesco PSU equity fund, right? If you look at the performance, in the last 1 year, the compounded growth rate is about 38%. The last 3 years is 31%. So it's been pretty stellar. By the way, that's the governor walking in and all ready to give the RBI policy announcement that happens in just a while from now. We'll be hearing from the RBI. Of course, there's no move on rates expected this time around, but any commentary, because see, inflation is cooling off, and any kind of indication on a change in stance is something the market is perhaps waiting for. In any case, rate cuts are expected from the second half of the next fiscal. But, okay, we have about 30 minutes to go before the RBI monetary policy. But Taher, I just wanted to, close that loop on this whole PSU space. We were talking about how the funds are doing very well, right? So in that context, there's been a 30% compounded growth rate that we've seen in the last 3 years for this PSU equity fund. In case someone has not invested yet, does it still make sense to do so?
Yeah, I think the backdrop is pretty solid that we have in front of us for the PSU segment to thrive from a growth perspective, and most of the elements, as we all know, are in place. Of course, it's always a little difficult at such times when you can't see any risk around the horizon. So you have to be also a little watchful. But I would like to think that we are in a good space as far as the opportunity is concerned, and most of the factors which actually drive PSU performance, both from the point of view of growth as well as value, are available. So I would like to think that there is still, up until the time that we have this domestic cycle, which is strong enough, I think they will continue to do that.
Okay. All right. Final question, Taher, from my end before we let you go. What's the view on IT from here on? The sector has been quite strong given the kind of news flow. That there are still fears that maybe, in fact, 2024 will be a year of slowdown. How do you approach the tech companies?
Yeah, we are as confused as you are. And, I think at least we take comfort in the fact that, they will come back. I mean, they've got business opportunity in front of them, and they are obviously sitting on a good amount of business visibility, except that they have to contend for some delays in the short run. We are somewhat watchful as far as the US cautionary, I would say, as far as the US economy is concerned, and things can get a little pushed back. Earlier, we were expecting a first quarter, second quarter kind of performance out of the IT companies, but probably now it looks more like it'll get pushed into the second half of the year. So there's still time, but there could be some opportunities even within that space where the growth is a little more stronger, stickier, and they're not necessarily getting bogged down by delays. So some of the R&D companies, for example, are doing reasonably well. A few others too, even in the mid-cap space, for example, in the IT sector. So I think yeah, it's a bit of a wait and watch out there, I guess.
Taher, the other space where there's so great deal of optimism, and by the way, Sonia is going to later on Editors Roundtable put out a piece on that, which is essentially, I think, the rise in demat accounts, right? New investors who've kind of come in. Capital market plays, very bullish kind of sentiment out there. Taher, so just what's the best way to capture that value, in your opinion? I mean, if equity markets stay buoyant, more people come into the market, I think, it's a space which will do well. There is exchanges, there are depositories, there are mutual fund plays, wealth management. But what's the best place to capture it?
So I think much of this ecosystem that you mentioned and most of these constituents actually are well placed, and we have a reasonable exposure to almost all of these constituents. So we're taking a somewhat diversified bet even within that space. But by and large, I think there are some where probably the regulatory risk is somewhat lesser. Regulatory risk probably in terms of pricing related risks or few of the other things are perhaps a little better compared to some of the others. So to that extent, we've kind of, we've calibrated our exposures within that space. But I would like to think that obviously equity markets, we understand better versus commodity markets. So that's, it's, have a better handle, and everything around the equity markets therefore looks good. But much of the play actually is around equity markets that's available in the market today. I think some of these
which space is risk lower? Which space is risk lower within that's
the equity space? I mean, the equity space, the risk is lower, I would say. Plus, in some of the equity subsegments, the competition is also limited. We are dealing with a 2-player market, a 3-player market.
Okay.
Versus some of the others where maybe there are 30 players. So, you probably then have a somewhat better positioning out there.
All right, Taher, we'll let you go on that note. Thanks a lot for joining us. Appreciate your thoughts here. And if we don't meet again, Happy New Year to you and your entire team at
Happy New Year
Invesco.
to you guys as well at CNBC-TV.